The industry has now built more storage locations in the United States than we have Starbucks, McDonald's, Dunkin' Donuts, Burger King's, Wendy's, Walmart's, Home Depot's, and Costco's combined, which is just insane to me to think about. You go to a town that doesn't even have a post office, and it's going to have multiple self-storage facilities. It's been the fastest growing segment of all commercial real estate for 4 decades straight. It's outpaced self-storage REITs have outpaced over the last 30 years.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of Zana Investments, Tim Little. And on today's show, we have with us Joseph Woodbury. Joseph is the co-founder and CEO of Neighbor.com. Joseph has pioneered the concept of full property monetization, helping investors maximize returns by transforming underutilized spaces into profitable storage solutions. Joseph, welcome to the show.
Thanks so much for having me.
And it is great to have you. And I'm certainly excited to learn how you transform those underutilized spaces into profit generators. But first, please tell me more about your story and how you got to where you are today.
Yeah, we got into this space just from having the problems ourselves. My co-founder needed storage and tried to get a storage unit, and they were all full close by. So he ended up storing with a friend in his garage. And we had the thought, there's got to be empty space in every neighborhood in the country that's sitting empty and no one's using it. Why couldn't that be rented out for storage? So we actually started out in the residential space where we were renting people's homes, garages, sheds, driveways. That grew nationwide. We now have people renting out their homes in almost every city in all 50 states. We're the only storage operator in the country now that's in all 50 states. And from there, that's where we branched into more commercial builds, where you have office buildings that are emptying out. You have retail in some areas that has excess space or parking. Multifamily has turned out to be a massive category for this. And so now we're helping commercial property owners and REITs and smaller portfolios, everything in between, monetize their properties as well.
Yeah, and that's really interesting. I don't think I've heard of that before. So let's start off small and help us understand what that looks like, practically speaking. If you talked about even garages being rented out, what does that process look like? Say my garage is empty for whatever reason, and I'm like, hey, it'd be great if I could make a couple of bucks off of this. What did that look like in terms of transactions, setup, etc.?
Sure. So if you have a garage that you're not using, you can go on, list your space on Neighbor. It's about a 10-minute process to list that. We're going to ask you where it's located, what your address is, what amenities does it have? Does it have a separate entrance? Does it have security cameras? Things like this. And then we're going to recommend you a price. Ultimately, it's up to you to set whatever price that you'd like to earn on that garage. But we have the best self-storage pricing data of any company in the country. And so we'll tell you what you should price it at to get rented. You'll list that, and we'll find you a renter and bring them to you. We also ID verify you. So every single person that lists on our site, de-verifying them. We're also manually reviewing your listing, so it'll get submitted to be reviewed by our team physically, and then you'll be allowed to publish it on the platform for us to get you a renter.
Okay, and with that, I assume how do you guys get paid? Is it a one-time fee? Is it a monthly fee? What does that look like?
So it's very similar to Airbnb if you've ever used that before. There's going to be the price you set as a host, and we're going to charge the renter that price plus a service fee on top. And that's how we make money, is that service fee. Plus, for you as a host, the only thing that comes out of your earnings is a small processing fee.
Okay, and that all makes sense. So now let's scale that up, right? You talked about office, and I could see there's obviously a lot of office that's sitting empty right now. And that seems like an amazing opportunity, especially for those owners, to use this space, even if not for its intended use. Is there any issue associated with permitting or the way that it's set up by the city, like in how it's being used? For example, it's zoned as office, but they're using it as storage. Is that even a thing or a concern?
Yeah, that's a great question. So, we actually will work with some buildings, some smaller office buildings, to do full property conversions where you're taking the
Oh,
entire
wow.
property and converting it to rent it out on our platform as self storage. And in that case, you do need to pay close attention to that zoning. However, the vast majority of the projects that we're working on nationwide, we're just taking a small piece of the space. So, if it's an office building, maybe it's a 12-story office building, we're just taking the first floor that they struggle to get tenants in. Or we're taking the parking garage that's empty because everyone's working remotely and we're renting out that parking garage for vehicle storage. And when it's not your primary use, it's much easier to implement it without having to change anything whatsoever about the building or the permitting.
Okay, no, that's interesting. So yeah, most of the time, obviously, you strive to not have to do anything to the property. Can you give some examples where you have done that? You talked about like completely remodeling a
Yeah.
building. Is that something you've done before? And how heavy of a lift was that?
Yeah, it is. It's something we actually actively do ourselves. It's aside from our core business, but we actually have a small fund where we go out and buy distressed office space because prices are
Okay.
so depressed right now. We can get it
Mhm.
at a great price. We can convert it into storage because of our platform. We have all this data. We know exactly where to buy them so that they get leased up very quickly, and then we can sell it at a self storage cap rate. And it's a great opportunity. It's very low lift. There's been a lot of talk over the last couple of years as office has been in distress about office to resi conversions, converting these buildings into residential.
Yeah.
It's a pain in the butt to do that. You got to
Yeah.
replumb the whole building. Zoning's an issue, windows are an issue. The floor plate just doesn't work. You can buy a building and it ends up costing more than the cost of the building just to retrofit it. With storage, though, you don't have to typically, especially the buildings that we're looking at, we're looking for buildings where we don't have to change anything structurally. We're just going in and putting units in. They don't even go to the ceiling. So it's very simple, very straightforward. Double digit cost per square foot is all.
Yeah, and that's a really good point that a lot of people just don't realize, right? It seems logical. Hey, the building's empty. We should just
Right.
convert it into housing because we're short on housing, right? There's always a housing shortage. Unfortunately, like you said, it's not that simple. And even I didn't realize all the complexities involved in just because of, like you said, the shape of the building, where
Yeah.
bathrooms are located, the piping that would be involved to get it to where it needs to be and to have the required windows and everything else, the things that you mentioned. It's so complicated that it's often cost prohibitive, like you were alluding to. So for a lot of people who are wondering, that's why you don't see more office to commercial residential conversions.
And it's only becoming a bigger problem. We're supposed to see double the amount of office buildings come to maturity this year than we did in 2023.
Hmm.
Something like $14 billion worth of office. And you're going to have interest rate adjustments on those. And it's only getting worse.
Yeah, for sure. So let's move up to the multifamily space. How did you interject yourself into that? And I imagine it's not too different than what you were doing at the single family level, just on scale. Is that about right?
Yeah, multifamily, honestly, of all the categories, is probably the most attractive. It's just a no brainer if you think about it. We work with several of the largest multifamily REITs in the country. And traditionally, you got a lot of your ancillary income as a multifamily owner from things like cable deals. Sometimes you had other ancillary services, but typically it's some sort of telecoms deal, which those are actually going away right now. The communications bureaus, the FCC or whatever, is looking into those deals and they're actually trying to take them away. And so where we fit in is you've got excess space as a multifamily owner. You've got parking that the city made you build that's not being used by tenants. That takes zero capex and about 24 hours for us to turn that on and start getting renters into that space. Then also the other thing that multifamily has that makes it very interesting is most multifamily buildings, especially larger buildings, 100, 200, 300, 400 door buildings, they built storage lockers into the building as a tenant amenity. And these storage lockers are, on average, highly underutilized. We've seen multifamily buildings. We onboarded a large multifamily partner in New York City. And in like downtown Manhattan, there these storage lockers are like 25 30% occupied. You contrast that with the storage industry that's 95% occupied on average. So we'll take all these interior storage lockers, we'll rent them out to not only your tenants, but also to the community. We'll get them to 90% occupancy very quickly. So between that interior storage in your storage lockers that you've already built and the excess parking outside, you've now got two new revenue streams coming to your multifamily property, which in a climate where rents are pretty stagnant makes a huge difference. We're having partners that are experiencing rent growth this year almost exclusively because of what Neighbor's doing. Their rents are flat across their portfolio, but they're adding Neighbor, and you can earn seven figures in a year across a large portfolio.
Yeah, that's interesting. And of course, I find the prospect of additional revenue streams attractive. As owners, we're always looking for ways to add value, but also to increase revenue from whatever we have there, whether that's laundry facilities or parking spots is one that we have implemented at some of our units. But I think the way that it's different with what you're talking about is that when we rent out parking spots, it's specifically for the tenants and exclusively for the tenants, right? So that still restricts us to some extent.
Yeah.
And I think obviously the revenue is great. The one concern that I think would be raised is is safety a concern when you're bringing non-tenants into your and onto your properties?
Yeah, so it's very property owner controlled. And we've effectively built a program and a software that you can use to monetize. And we have all sorts of tools where you can be very prescriptive on what types of vehicles you'd like to allow. If you just want to maximize earnings, you can allow any type of vehicle, boat, RV, camper, etc. But if you're in a specific downtown area and you want to be really prescriptive, you can say no boats at this property, no camper trailers at this property. I only want sedan vehicles parked in these spots, and we will vet that for you, and we will make sure that those exact type of renters are placed. We can also we can integrate and go through your same system. So some of our large REIT partners, they have a whole key fob system that they're set up with. And we actually link into that and provide those key fobs to the tenants when they come on. We process all the payments. You'll always get paid. We take care of that. And you're right. A lot of people, they've already started to dabble in parking. And I think quickly, many multifamily operators realize that parking's not their core competency and it's hard to drive that. And so we've even had some of our partners, they've had so much success with us managing their excess. They'll actually come to us and they'll say, hey, can we just use your tools to manage all of our tenant parking, including like the existing stuff? Because we integrate so well with your accounting and with everything else that it just makes it very easy to manage all that stuff that's not unit rent.
Yeah, I think it streamlines it as in terms of the additional revenue streams.
Right.
So that makes sense. Yeah, you talked about like boats, RVs, campers. I would imagine there's a premium when it comes to your pricing for those spots, that there would be a premium on the larger the vehicle is. Is that the case?
Yeah, it's all based on the space size, right? So if it's such a size that it can only fit a vehicle, it's going to command one price. If you in the back, you've got longer parking spaces, or if you've got covered parking spaces, those are going to command a premium. And our system is robust enough that it'll actually tell you, it'll say, oh, if you have an open parking space, charge this much. If you have a covered parking space, charge this much. And again, ultimately, you can decide whatever you'd like to charge. You're in charge of that. But we do have smart pricing features where you can actually hand it over to us and we'll auto rotate the prices as the year goes on.
Yeah, and that's nationwide, right? So you're able to drill down to the local market to ensure that
That's
you're
right.
in line with whatever competitors are charging.
That's right. And honestly, we used to rely on a lot of market data because we were a smaller company. And so we looked to what are other people charging. At kind of the scale we're at today, we honestly have moved away from looking at that competitive data. And we look at our own platform transaction data because we get so many transactions. And unlike a traditional storage facility that can't do much variable price testing, They maybe go up 10%, down 10% because they don't want to risk their price level. We have such variability in hosts, and these hosts set all sorts of prices. Some people will ignore our recommendations altogether and they'll price 200% above. And some people will ignore our recommendations and price 50% below. And our system gets to watch and see all of those different price points in every city in the country and what gets rented and when it gets rented and how it gets rented. And so that all crunches back through. And that's why I don't think there's a storage company in the country that has more high quality pricing data than we do.
Yeah, and that's a good point. In terms of those other companies that are out there, the ones who are exclusively doing storage spaces,
Yeah.
right? And I've talked to a lot of folks who are doing exactly that, whether they're buying up small mom and pop places and adding value to it by adding features and amenities, or like the big box ones that are just buying up land and building new ones. What I found is some area there's still huge demand,
Right.
but other areas seem to have gotten saturated because too many people moved in to the same places. Are you seeing that in any of the markets that you're in?
Yeah, definitely market to market, you're going to see variability. If I had to say where it is on the average, it's significantly supply constrained. We have millions and millions of renters that come to our site every year that we're not able to service. There is just an excess of demand for storage. And for us, we can fill supply just about as fast as we can get supply. So supply is, or space would be the term. As fast as we can get good, high quality supply, we can fill that. We have much faster lease up times than I think traditional storage facilities do, partly because we can operate we can run a scale operation. A mom and pop storage facility is not able to run the same type of operation that like Public Storage, which is a $50 billion company, can run. Now, you look at Public Storage, they're only in 39 states. We're in all 50. So we can run an aggregated operation across all 50 states. And so you can plug in as a piece of that and take advantage of that local demand. We'll actually do, when we onboard partners, say you have 50 multifamily properties nationwide or in a handful of states. When we onboard you as a partner, we'll take the list of addresses you give us where you have excess space, and we'll run a full analysis for you. And we'll say, okay, of the 50 spaces, of the 50 properties that you have, we'd recommend starting with these 10. They're in high demand locations. They'll get filled the fastest. They'll command the highest prices. And we can give you a revenue estimate for every single property. And then you, as the owner, can decide, okay, now seeing these NOI estimates, I want to turn this one on. I want to turn this one on. I want to hold off on this one. So we make it very easy to make those decisions.
Okay, and what is the minimum times? Are you doing just 30 days for this? Is that a minimum or does it go lower than that?
It's all month to month, which is good
Okay.
for two reasons. One, it's great for the renters because they're not locked into a long-term contract, but it's also great for the property owner because, if you own a strip mall, a retail space, and you have a suite that hasn't been rented in 5 years, you want to rent it out on Neighbor's platform, you may hope that you rent that out to a retail tenant at some point. And with everything being month to month, you can turn that back into retail in 30 days notice. Now, for our purposes, we like it as well because we're fine providing the flexibility because we know that the income's quite sticky. Once you get those renters in there, you're going to love that kind of passive, low churn, stable income. And so turns out once people start using us, they almost never take that property off of Neighbor because they start earning a pretty healthy amount of money.
Yeah, and so that leads me into my next question. I assume that most multifamily owners are using this for what you were talking about earlier, which is the parking spaces. But has anyone had excessive vacancy and they're like, hey, I'd rather have those 30 days of someone storing stuff in the unit just to get some income, or is that not a thing? Because obviously you don't want to take that lower amount for someone just storing stuff in a unit when you could be charging a full-on rent for it. But at the same time, every empty unit is money you're not getting. So I'm
Yeah.
just wondering if that's ever happened.
It certainly has. We've had student housing projects that will take their vacant units in the summer and rent them out as storage. However, by
Okay.
and large, we're just working with either A, the parking, or B, the storage lockers that were built for the tenants. We're at historically low vacancy rates in multifamily right now. Even though rents are starting to soften, the occupancy rate in multifamily is very high. So it doesn't make sense to take a rentable unit and rent it out for storage. Honestly, where we do better anyway is renting out those storage lockers that are already purpose built, or renting out those parking spaces, because then you don't have to think about any headache. You can just turn on the revenue. It all goes straight to the bottom line. There's no capex. It's very easy.
Yeah, and that makes sense. And so from the customer perspective, if I went on and rented one of those storage lockers, is it a matter of it's there, I check it out, and I just have to provide my own lock for that storage, and then I'm good after I've signed everything and met the verification requirements and all that?
That's right. Yeah. We'll take you through the process online of signing all the things that you need to. We'll collect your payment information so that you can pay. In most scenarios, you're providing your own lock. Occasionally, with maybe a larger multifamily group, they'll have some sort of key code system that they like to use, in which case we provide that to the renter. But in the vast majority of cases, yeah, the renter's bringing their own lock, and it's very simple.
Okay. Have you started selling locks on your site too, just to max the profits that way?
Not yet, no. We try to focus on just providing the best SaaS tools we can to the hosts so that they can know what money they're earning, when they're earning it, and then providing a kind of a seamless renter experience to the renter. So that's where a lot of our time and effort goes. If you go on our website, you're going to have a very similar search experience that you do on like an Airbnb, where we try to make it as easy as possible to find the right storage solution for you in the right location. We're called Neighbor because we tend to be much closer. You can find storage in your neighborhood. You can find storage at the multifamily complex across the street. You can find storage at a retail place that's near where you work. So it's all about convenience and finding that exact right storage placement or vehicle storage placement for the renter, and that's like where we spend almost all of our time.
Yeah, and it sounds like you focus on that convenience aspect for both sides, right? For
That's
the owners and for the renters. As an owner, I guess I would be wondering, what are my avenues if I need to talk to a real person? Do you guys have customer service up that I would be able to do that if I was having an issue or just wanted to talk through something by trying to figure it out on the website?
That's right. Yeah. So if you're a residential user, you're just renting out a small space in your home, we have customer support that can assist you. If you're a large portfolio that has properties in multiple states, or a larger portfolio within a state, you'll actually have an account representative that you can reach out to at any time that will help you onboard. And we can set you up with advanced admin controls as well. If you're some of the REITs we work with are $20 billion REITs, and they have property managers all over the country, and their centralized controller wants to be able to view all the reports rolled up, whereas the property managers just want to view how their specific property is doing. And all of that can be set up on our platform to where there can be one master account that sees all the properties and then individual accounts for each property itself. So we can go as big or as small as you want to in that way.
Yeah. So as I'm thinking about it, we're talking through, and I was like, all of this makes a lot of sense, and it seems really convenient. I guess the question I have is, why have I not heard of this before, and why does it not seem as popular as it should be, unless I'm just not seeing it? Maybe other people are using it. I just haven't been introduced to it before.
Yeah. Two things I'd say is one, I remember when I first heard about Uber, and I just remember the conversation where someone was telling me about it. And I was like, you mean you get in the car with a person that showed up from this app? And I was just in disbelief. And they were like, yes. Like, how have you not taken an Uber before? Everyone uses an Uber. And now it's gotten to the point where I'm pretty sure my grandparents have taken an Uber. It's gotten so ubiquitous. So part of it is just these new technologies, they ripple through the economy where you start with early adopters and then you start branching out. Right now, the individuals using us are the creative property managers, those that I think the asset managers that are going to win over the long term are those that focus on this concept of full property monetization. They cease to see their property as, oh, this is office, or, oh, this is retail. And like, all I'm good at is retail. And they start to think, I'm an owner of a property and I want to make as much money as possible on that property. I don't really care how I make money. I just want to make as much money as possible on the property, generate the most return for either myself or for my investors as possible. And so those property owners that are most forward thinking, their portfolios are going to do the best, and they're the ones that adopt this earliest. The other thing that I just say is storage isn't exactly the most sexy topic in the world. So people use storage. Some stats on the storage industry. We have now built, the industry has now built more storage locations in the United States than we have Starbucks, McDonald's, Dunkin' Donuts, Burger King's, Wendy's, Walmart's, Home Depot's, and Costco's combined, which is just insane to me to think about. You go to a town that doesn't even have a post office, and it's going to have multiple self-storage facilities. It's been the fastest growing segment of all commercial real estate for 4 decades straight. It's outpaced self-storage REITs have outpaced over the last 30 years all REITs by 50%. Publicly traded self-storage REITs have outpaced publicly traded REITs category by 50% on a 30-year CAGR. And yet you just don't hear people talk about it, right? It's this massive industry. Storage does 10 times the amount of revenue on an annual basis than the entire taxi and limo industry that Uber and Lyft disrupted does. 10 times the amount of revenue. And it's just not the most like dinner party conversation. Hey, what do you got stored in your storage unit? So that's the other component to this. That's also what makes it an attractive revenue stream. It's boring, right? It's boring. It's non-cyclical. In 2008, when most real estate categories saw a contraction of anywhere from 30% to 80%, self-storage grew by 5%. So it's boring in a good way. It's so stable. It doesn't go through economic cycles. It just performs year after year.
Yeah, and like you said, talking about the stickiness earlier, self-storage is very sticky because people just buy more stuff. They rarely get rid of stuff. So the need doesn't go away once they have it. Very rarely anyways. And as a property owner, one thing I'm thinking about, and that I've explored in the past on some of our larger properties where we have like extra space, where we know people aren't parking over there or whatever, is the possibility of building storage units. Because there's, I don't want to say out of the box, but basically out of the box storage solutions that you can buy and just plop right on the property and use those for storage. On the one property we were looking at, it didn't make sense from our underwriting and all that. But I'm wondering if you've seen that or recommended that to owners where they have the space, and do they get more bang for their buck if they have storage set up there with, say, 6 storage spaces versus those 6 parking spaces that they're taking up with those buildings?
There's absolutely no question that you're going to earn more per square foot by putting in a storage solution there. However, we always recommend to our owners that are considering it, we always recommend that they just start with vehicle storage. Some individuals, they'll want to invest, and we think that's great. But we say just start with the vehicle storage. Let us get it rented so that you can start to view those as storage spaces and see how comfortable. Let the revenue start coming in. And then as you start having revenue, then make investment decisions. And it turns out the more revenue people make with us, the more they start to invest in their spaces and say, okay, now I want to put more money into this because I know it's a guaranteed thing. I can have confidence in this. But to start out, we want to make Neighbor always a no CapEx decision, where just let's start in a way that it does not cost you any outlay. This is all just positive NOI. that you can sell your investors on. And then once it's a meaningful NOI or ancillary income stream, then let's make decisions like putting down sheds or built out storage units on those spaces, and you'll earn a lot more money.
Yeah, no, that totally makes sense. And I like that approach. It's that phased approach, right? So get
That's
the
right.
income first, then basically invest that income into a better solution so that you can, again, increase your income and everything else.
That's right.
This has been super interesting conversation. And I appreciate you entertaining all the questions that I'm selfishly asking as a multifamily owner. It's certainly helpful. And I think it's helpful for anyone listening too who's thinking about passively investing, because it makes them more educated investors, right? If they're able to ask these operators, hey, have you thought about an additional revenue stream from doing this? Then not only will it make them more money, it may make that owner more money and all those investors in that deal. So I think this is great info. Right now, we're going to switch over to the turbo round, though. So I'm going to ask you 3 questions that I ask every guest I have on the show. And I just ask for a quick, honest answer. Are you ready?
I'm ready.
All right. First one. What is one red flag every investor should look out for?
Every investor should watch for a model where everything has to go right in the model to make it work, where there's no redundancies built in. That's one thing we always tell people is use us as a redundancy to where when you're presenting your model to investors, you can say, look, we don't need every unit to sell perfectly because we have this ancillary income that can make up for it, and they're on different market cycles. So if something goes wrong here, we're still safe. We have this baseline IRR that we can't cross underneath.
Yeah, I think that makes a lot of sense. We're always preaching to go conservative in your underwriting.
Right.
And it may be, here's our pro forma of what we expect to be making in income. And if this works out the way we expected, this will all be gravy on top.
Upside.
All right, second question. What is a myth about this business that you would like to set straight?
I think a myth, just amongst commercial real estate in general, again, is this idea that you as an asset owner are constrained to that asset type. There's no reason why you can't take advantage of other asset types. You own property, it's in good locations for good reasons. So if you look at an industry and you think, man, I want to invest in that industry, why don't you just invest in that industry through your property? If you've got friends that are making a ton of money on storage, for example, and you own a lot of multifamily, you own a lot of office, there's nothing stopping you from getting some of the returns of storage on your property. So this idea of full property monetization, I think it's the counter to a big myth in the industry.
Yeah, and you're diversifying too, essentially,
right?
The revenue streams. All right, last question. What does success look like to you?
Value, right? People try to measure success in so many ways, but I think if you're providing value to your customers and they are getting a return off of it, if they are making money or saving money, that's the things you should be looking for, is who is deriving value. Because if they're deriving value, they will keep coming back for more. If someone is buying your product but not deriving value, that's the last time they'll buy your product.
Yeah, absolutely true. All right, Joseph. Hey, this has been awesome. Please tell our listeners how they can get a hold of you and if there's anything else you'd like to share.
So you can go straight to our website, neighbor.com. Tried to make it as easy as possible. We're also the top ranked self-storage app. If you just search boat storage or car storage or self-storage on the App Store. If you're an owner of a large portfolio of office or retail or multifamily, you can email me directly, joseph@neighbor.com, and I'll get you in contact with our asset heads there that run our different asset classes to partner with you. So,
all right, we'll definitely have all that information in the show notes. Again, want to thank you for coming on, and I look forward to seeing you do big things on your journey.
Thank you.
All right, have a good one.
You as well.